Becoming a homeowner is a very exciting and fulfilling experience. It's actually the largest financial decision that a lot of folks will ever make in their entire lives. Now, at the same time, there are many steps and requirements that have to be completed along the way. We at Good to Go Realty believe that our clients are in a much better position to obtain their real estate goals when they're educated about the process. This is why it's a top priority here at Good to Go Realty to educate our clients. So stay tuned for our next presentation on becoming a homeowner. Thanks for joining me here today. I'm Shane Tracy, broker of Good to Go Realty, and I will be going through the home buying process in detail today. I assure you, after hearing this information, you'll be much more confident and decisive about your goal of becoming a homeowner. So let's get started. The overview is showing that we're going to start with some things that you probably thought were the truth. Come to find out, great news, it's not, right? Renting versus buying, the value of home ownership, and I think this is really hitting it home. Budgeting and preparing for home ownership, so we're going to be talking about how to get ready for that journey to home ownership, going through the journey to home ownership, meeting your team. Believe it or not, you've got a team. You've got a team when it comes to buying a home. Getting pre-approved, very important step, making your best offer. Then we go to closing and even talk about after closing. So when we talk about myths, some of these things you probably thought were true. One of them being needing 10 to 20% down, a down payment of 10 to 20% of the purchase price of the home. This is no longer accurate. No longer accurate. It could be as low as 0% down, as maybe 3.5% or 5%, but not 10 to 20. The next one is less expensive without a realtor or broker. So going through the home buying process, I will tell you that it is no difference in price, whether it is a pre-existing home or a new home. It is not any less expensive if you don't have a trusted and experienced real estate professional, realtor or real estate broker at your side. Not anything less expensive. Maybe that was the case at some point, but no longer is. Student loan debt will stop you from owning your own home. This is a big one. We've got a lot of folks out there with a lot of student loan debt. And I even had a client, I've worked with many clients that have had student loan debt. And I actually had a client that thought the idea of owning his own home would be in his 5 to 10 year plan. 5 to 10 years away. Once I educated him on the home buying process, just like I'm doing with you all today, and then he decided to complete the application to get pre-approved, he was in his new home in 45 days, folks. In 45 days, his own home, and that really just floored him. Really floored him, folks. And so along with that, there is a company out there called My Education Solutions. This company is finding solutions to lower your student loan debt through already existing student loan forgiveness programs that, believe it or not, have already been in existence out there. And they'll actually match you up with the right student loan forgiveness program. And that in turn lowers your monthly payment for your student loans and offers you more buying power towards your own home. So you've got tools right now. We haven't even really gotten started. You've already got tools in your toolbox, if you will, to get ready for you to be in position to buy a home probably quicker than you thought, right? I can already see it. Great credit scores required. So it is wonderful to have a credit score in the 700s. Absolutely wonderful. absolutely wonderful. Do you need it? The answer is no, you don't. It can be in the 600s. It can even be in the 500s, folks. I've seen it myself. You'll probably need more money down if it's in the 500s, but it can be done with the right lender and the right loan program. Down payment and closing costs are the same. This is something that we definitely need to delve into because some folks have felt that there's somehow we're just using the same explanation just in different terms, and it's two different things. Your down payment is the amount that's required per the type of loan that you have. Again, as I'd already mentioned, it could be 0% down payment. It could be 3.5%. It could be 5%. So that's your down payment. And most of that down payment isn't due until you actually go to closing. So it's not all of that's due right at the beginning, and I'll go into what is due at the beginning. And your closing costs are the expenses, the fees involved in actually completing your loan and completing the title work to get you to the closing. So those are two different types of costs, and all the closing costs are due at the closing. They will range normally between 2 to 5% of the purchase price of the home, and the most of your down payment will be due at closing. And I hope this really drives some information home to you all, and you feel already more confident in what is true and what is no longer true. All right? So, when we talk about what's the difference between renting and owning, the first thing I want to say to somebody, I want to ask them this question: what mortgage are you paying each month? Just let that sink in. Every month you are paying a mortgage, and it is either your mortgage or your landlord's mortgage. I know that's just driving it right home, right? So it's one or the other. And when you're paying your landlord's mortgage, there is no financial uh, upswing to that. There's no financial um, help for you. Where if you own your own home and you're paying your mortgage, you are actually building your wealth. Okay? What's your interest rate? This is another one that just really takes the oxygen right out of you. Interest rates for a home purchase can be different from one time of the year to another. For one part of the decade to another, it could vary. But no matter what, your interest rate when you rent is 100%. So how do you figure that, Shane? Because you're not gaining anything from the idea of renting your home, renting a home, okay? All you're doing is you're paying the landlord. You're not getting anything back from that other than actually living there. But financially, there's no upswing, like I said, to actually renting. Stability. I have had many clients that have contacted me frantic, even in tears, explaining to me that they just got a text, they just got a voicemail, they just got an email from their landlord saying, things have changed, we're moving back, getting a divorce, deciding to sell, and the painters are on their way. I mean, I have had people really freaking out saying, what do we do? We don't believe that we're prepared to buy a home, and we have got to find a new place to live. That you don't have to worry about when you own your own home. It's yours. Now, there are many people out there that may think, you know what, Shane? I get it. I'm grasping everything that you're saying. But the fact of the matter is, we're just not in position to be able to take that step into home ownership. So the great news is that there are some excellent rent-to-own programs, several companies out there that will actually buy the home that you're interested in. You become the tenant in that home, and you have an agreement with that company that you would be able to purchase that home in the next 3 to maybe even 4 years. It just depends on the program and the agreement and all of that. So there are different options if you want it. If you want it. So let's delve further into the value of home ownership. Let's start with the tax incentives. There are many out there, many tax incentives. And I will tell you right now, you want to reach out to a CPA or a tax professional to get the specifics on what is going to work for you, what's right for you, and what's maybe not or applicable. And I'll be going into that further in the presentation here. Equity. That is the monetary amount between the fair market value of your home at this time versus what your mortgage balance is. And over time, that amount should be getting larger. That difference should be getting larger. That's your equity. You can turn around and refinance, get money out that way, or use that money in the event that you did want to purchase another home and sell the current home, use that towards the purchase of your new home. That is helping build your financial portfolio for sure. Potential long-term investment, no matter what, whether or not there is a mortgage involved, when you are a homeowner, it is proven over history that the fair market value of property, of real estate, increases over time. Is it exactly that all the time? No, it's not. Over time, though, that's what you should expect. And that, again, is another reason to be a homeowner, because that is also part of building your financial portfolio. And last but not least, making it your own. I mean, how many of you all have lived in an apartment or somebody else's house and thought, oh, geez, I better not put a hole in the wall, nail hole, or, oh no, I know we have an agreement that we're not going to change the colors of any of the walls. But when you own your own home, you can do all of that. It's yours. Put on the addition to the home, whatever the case may be, because it is your home now, not somebody else's. And that's the difference. Oh, hey, did you know according to a Gallup poll, real estate has been rated as the best long-term investment for 9 years in a row? I mean, they were comparing it to gold. It only got like 15%. Stocks and mutual funds, it only got like 24%. But real estate got 45% in this poll. Folks, when it comes to purchasing your home, you're not just buying a place to call home. You're investing in your future. Real estate is typically considered a stable and secure asset that can grow in value over time. Just some food for thought. Along with the value of home ownership, it's also your shield against inflation. When you have that stability and that security that your principal and interest is going to be on a fixed rate mortgage, it is going to be the same amount each month. What can differ is your property tax amount and your homeowner's insurance. And I'll be going into that a little bit further and talking to you about what options you have with that. Using your home price appreciation to your benefit. And again, that goes back to the idea that when you are building that equity in your home, you can turn around and use that cash through a refinancing, for instance, for whatever you're needing with that home or to buy another one, whatever the case may be. It is a great difference between that and paying a monthly rent amount to your landlord. and getting nothing back. And then, of course, as I've already mentioned, this is all in an effort to build your financial portfolio. You may be wanting to look at your first home, being first time home buyers, and it's not going to be your forever home. I've had many clients that have realized that even though we are now homeowners, this is not going to be our final home, and that's okay. You can actually rent that one out down the line and go to purchase another one if you wanted to. Again, that's another way of building your financial portfolio. Along with this, uh, we definitely want to talk about what it takes to budget for your home buying, to become a homeowner. These are the things that you want to budget for when it comes to purchasing a home. Earnest money, that is part of your down payment. I have separated these because I want to make a point here. You have your down payment, which is, let's say it's 3.5%, according to the particular type of loan that you're qualified for. That, the majority of that, again, is not due until you close. But at the beginning of going under contract, you're going to need to pay what's known as the earnest money. This is a negotiated amount between the buyer, you, and the seller, okay, showing in good faith that you're putting some money up front. Now, what I typically see, is 1% of the purchase price of the home. So that gives you an idea. So of your total down payment, for instance, 1% would be due right at the beginning of going under contract. Okay. And again, the earnest money amount is a negotiated amount, but what I'm typically seeing is 1% of the purchase price. So keep that in mind. The rest of your down payment, again, is not due until you actually go to closing. Whew! You don't have to worry about paying that right out of the gate once you go under contract. Closing cost. As I mentioned, these are the fees and expenses uh, that are going to be accrued through the process of getting your loan and all the title work. There's attorney's fees. There's all kinds of different fees that are involved to get you to that finish line. And the closing costs normally are going to be between 2 and 5% of the purchase price of that home. Now, along with budgeting, let's talk about lowering your monthly expenses so you can work out your budget a whole lot quicker to be able to purchase a home. Some of these things that may be appropriate, may not. Consider installing a programmable thermostat. This will allow you, once you go to work, let's say, the thermostat will increase the temperature in the home, and then by a certain time, it can decrease it back to what you're comfortable with being in the home. The next one would be lowering the temperature on your water heater. Ever thought about that? If you have access to your water heater, then you can adjust the temperature, and that can have some savings towards your energy bill. Use streaming services and cancel your cable. How many of you have been paying over $100 or maybe even $200 for your cable bill? I mean, it's extraordinary how much that can cost. But with streaming services, it's just a small amount compared to what you would pay if you had cable. The next one here is cancel any unused subscriptions or memberships. I think we would all be surprised at what we're actually signed up for that's coming out of our bank account monthly or out of a credit card, right? And so this is another way to save and lowering your monthly expenses. Reducing eating out and picking up food. You know, if it's just you, that cost is very minimal, or maybe you and a significant other. But if it's you, significant other, and the kiddos, that can really start to add up. So the more that you can eat at home, the better off you're going to be as you prepare to take that next step into finding your home and being a homeowner. Using coupons when shopping, and then your insurance. So with your auto insurance and your renter's insurance, you have what's known as a deductible. That's the amount that you're going to pay out of pocket in the event of a covered loss, a covered claim. Okay, so you can talk to your insurance company about increasing that amount and seeing how that can offset what you're actually paying in your insurance premium. So just some food for thought here. And along with that, you want to also prepare your credit. Know your credit scores. Know your credit scores. And you can check your reports for all three credit agencies by logging on to annualcreditreport.com. This is you can do it annually and get your reports from Experian. And the other two that I can't think of, lost my train of thought here. So from all three credit agencies, you can find out what your credit scores are. Make sure that that information is accurate, especially if you're a junior or senior. This can be really crucial. That stuff can get mixed up, and you want to make sure that those credit scores reflect your credit, not somebody else's. Okay? Hold off on making large purchases until funding. Some of these things you're going to hear me talk about a couple different times, and this is one of them. When it comes to preparing to purchase a home, you want to hold off on getting your refrigerator, your washer and your dryer, your new furniture, buying a new car, a jet ski, a boat, trailer. Hold off on all of that, please. We all get excited. This is such a great time. We're going to reach our goal of home ownership, the American dream, and we may forget. So hold off on any large purchases. And going back to the three credit agencies, Experian, Equifax, and TransUnion. Experian, Equifax, and TransUnion. Those are the three credit reporting agencies that you'll be able to see what your credit score is on annualcreditreport.com. Now, don't apply for any new credit and don't cancel or close any current credit cards, lines of credit. And you may be thinking, come on, Shane, I want to clean all this up. I want to make it as tidy as possible. But the fact of the matter is, believe it or not, it could actually negatively impact your credit score and your debt to income ratio. Okay? So just keep all of that in mind as you are preparing to do everything that you possibly can to be in the best position to own your own home. Now, some of these things, when it comes to mortgages, there's some very common terms that we should all be familiar with. Amortization. That is the total schedule of all of your payments once you have a mortgage, of all of your payments that you'll pay to the end of if it's 15 years or 30 years, whatever the case may be. So it shows each and every payment and when it's due and all of that. Yeah. Closing disclosure. This is a document that you're going to receive several days before you actually close that's going to break down all of the costs, all the debits and credits that are involved with the actual cost to buy your home. This is a very important document, and your lender is going to be possibly sending more than one copy due to changes that they make and updates and that sort of thing. But this is a very important document. Your debt to income ratio, that is the ratio between your actual debt and your gross income. This is an important ratio that is going to be looked at by the underwriting team that is with the lender. Okay, very important. And to answer your question, probably you want to keep that debt to income ratio as low as possible. Earnest money is going to be the negotiated amount of money that is given from the buyer to the seller via the title company, okay, at the beginning of the um, going under contract. So, what you're going to do is once you go under contract, it's actually going to go from you and it's going to be delivered to the title company, to be more specific. It's going to be given to the title company and go into an escrow account waiting for closing. Okay. So it's not unaccounted for, it is all accounted for and in good hands. Now, the next thing is your equity. That is the monetary amount between your actual fair market value of your home and your actual mortgage balance. Again, that over time should be growing. That should be getting a wider difference in numbers. So that means there's more equity that you have in your home, which is always a great thing. Escrow is the account that the lender is going to have for you when you have your monthly mortgage payment, when it includes not only your principal and interest, but also your homeowner's insurance and also your property taxes. It's going to be put into an escrow account and it's going to build up from there and be paid out once a month to the county tax district and also to your homeowner's insurance company. Points, that is an upfront cost that goes to the lender that you will pay at closing to the lender. These are points that normally they equate to 1 point being 1% of the amount that you're borrowing. Okay, so not everyone has points, but that is something to be aware of. Title, that is the document, the official document that proves who is the owner of a particular piece of property. Okay, so going from here, we're actually going to talk about the total journey from beginning to end of owning your own home, becoming a homeowner. The first thing is to choose your realtor or broker. I am a real estate broker. I can assist you just like a realtor. And what I am here to do is to make sure that me and my team, are getting you the best terms in a contract that fits you best, actually facilitating a smooth transaction. This is very important because there are lots of steps involved. And I'm here to facilitate a smooth transaction as much as possible. And I'm also here to help you locate your home. You're going to pick it, but I'm going to help you locate it. And I'm also going to guide you and educate you throughout the process. That's what I'm here to do uh, throughout the entire journey until you are a homeowner. And even afterwards, I don't go anywhere. I'm still going to be here. So don't worry about that. Get pre-approved. One of the things that I really recommend for my clients is that they find more than one lender. And I do work with several different lenders, but find more than one lender to get pre-approved through. Why is that? Well, you want to compare who's going to work, who's doing the best for you, and you can actually have them, working for you by letting one know, hey, this is what I'm getting with this other lender. What can you offer? So it's a good idea to make sure that you have more than one lender that you're looking at, and you want to do this within a 30-day period when you go to apply with several different lenders. The reason for that is your credit score is not impacted negatively like it would be if you decided to apply with ABC Bank today and then 46 days down the road apply with XYZ Bank, and then that can have a greater negative impact on your credit score. Okay, so we want as little impact as possible. So you want to do all the applying within 30 days. Okay. Searching for the homes. This is such an exciting part of it all. You get to discover all these different homes that you're seeing with the automatic search results that I'm emailing you, and you're looking on my free app that is directly connected to the MLS, so you have the most up-to-date list of homes. And through discovering all these different homes, now it's time to go see them. You've already got your pre-approval, and now let's go and see them. I really ask that you do your homework before we're actually out looking at homes. What I mean by that, drive by, make sure you like the community, make sure you see the home for yourself and not through a photo, and make sure that you can even talk to the neighbors, find out what it's like to live in the community. Is there zoning changes happening? What's going to be built around that community? Also, find out all kinds of details about, your commute to and from that new home from your job. All of this is really good to do. All your homework, get all your homework done before we're actually out looking at homes. And when we go to look at homes, I'm going to ask you to rate each home from 1 to 10, 10 being what you're looking for right now. Not your forever home. If it's not your forever home, if it is your forever home, of course, but if it's not your forever home, we're still looking at what you're looking for right now. And 10 being the best, then that is what, once I hear you got from an 8 to a 10 in there, those are the ones that we want to consider about putting in an offer. When we put in an offer, we need to be very strategic about that, and we're going to go into some tips here. But we want to put in your best offer and submit it with your pre-approval letter, which is very important. Now, once the offer is accepted, because this is a point of negotiating, folks, this is a point where you can put in an offer and then the seller doesn't agree with everything and then wants to negotiate even more, and it goes back and forth. But at the end of the day, what we need to see are both signatures, the buyer and the seller, on the what was your offer is now become your contract. Same document, once everyone agrees, becomes the contract. Okay. Now, after that, your offer is accepted, you're under contract. We need to deliver the earnest money, which again is a negotiated amount. Normally, I see 1% of the purchase price of the home, and the option period money. What's the option period? The option period, again, is another point of negotiating that you definitely want to take advantage of. It is a point at the beginning of the going under contract that allows you to have whatever inspections you want: home inspection, termite inspection. You want to have a roofer to walk the roof. You want to have a foundation expert, whatever the case may be. This is the time that we need to have that done. You get the results back through inspection reports, and we're going to sit down and talk about it together, and you're going to make one of three decisions. Shane, I'm ready to move forward. What's the next step? Shane, I want to move forward, but there are some concerns I want to address. Or, Shane, after looking at these reports, I'm sorry, I don't care for this home anymore. If that's the case, okay, you will get your earnest money back from the title company. That's number one. And we will continue to search for the right home for you. The option period money will stay with the seller. Keep that in mind, okay? But if you decide, you know what, Shane, I do want to move forward, and let's say that there are some concerns, then we are going to send that list to the the seller. Excuse me. You're the buyer. We're going to send it to the seller, and we're going to negotiate again. We got to come to an agreement. Both parties, buyer and seller, have to come to an agreement on what is going to be addressed about any kinds of concerns with the home. Then this is all going to happen within the option period, okay? And from there, we will take that next step of having the appraisal ordered. The appraisal is going to be done by a licensed appraiser. They're entirely independent. Yes, your lender is going to order this appraisal, but they are entirely independent from your lender, okay? And they're going to go to the home, evaluate the exterior, walk the inside. They're looking for any type of health or safety issues that can be a concern. And they're also looking at what and determining what the fair market value of the home is. That fair market value needs to come in at what you're purchasing the home for or higher. That's the key. If it comes in lower, then we're now at another point of negotiating with the sellers, okay? All through this, keep in mind this is a legally binding contract. There are all these different steps that are involved that have to be followed. Now, there are also ways in throughout the contract that I've put in place for you to protect you and your assets as much as we possibly can. All right? So do keep that in mind. Now, if the appraisal amount comes in lower than what you're purchasing the home for, then the seller could say, hey, I'll meet you halfway on that difference. The seller could say, I will agree to lower it to the appraised amount. Or the seller could say, I'm sorry, I'm not budging on the amount that you're buying the home for, that you're under contract for. So either you come up with the difference or I'm putting back on the market. So these are things that you need to be aware of. And again, as I've talked about, in part of protecting you and your assets, there's going to be language in there that will allow you to walk away if you guys cannot come to an agreement on that the value, the actual purchase price of the home that you both can agree to. Okay. Now, after that, and let's say the appraisal comes in, everything's good, and we're moving forward. We're going to do the final walkthrough. Remember going back to when you had your option period and there were some concerns that you wanted addressed. Well, guess what? You're going to be able to walk through the home and confirm all of those concerns have been addressed and the condition of the home meets your requirements to be able to close. Then you're going to sign a document saying that you approve the home, having done the final walkthrough. Then we're going to go to closing. It's finally time. You're going to go to closing. There's a bunch of documents to sign. Get ready for that. And then we're going to wait until it funds. F-U-N-D-S, funds. Because we need to make sure that that money transfers. Once that happens, the house is yours. You're now a homeowner, and you'll get your keys at that point. I bring this up, I'm very particular about it because there have been situations where folks, it's been on a Friday, they're ready to go sign all the paperwork at their closing, and they've been living in an apartment. They've packed everything up with the kids. It's in the U-Haul. They've turned their keys back into the leasing company, and they are literally ready to drive the U-Haul to the title company, all right, sign their paperwork, and then move into their home. I mean, right? I've closed on it. Let me move into my home. And a situation arose with somebody's client that for whatever reason, they were able to complete all their paperwork, but they weren't able to fund until Monday. This being a Friday, until Monday. What are these folks supposed to do? So I want to make sure that my clients are properly prepared for any type of situation like that. So it's not a good idea to be thinking that you're going to move right in that same day. More than likely, it's going to fund the same day, and then from there, you can take your whatever your schedule is to move in. Great, but just keep in mind that the funding is not at an exact point in time after you have completed all of your paperwork. All right. So, with that, we want to talk about who your team is. You've already met your realtor or broker. I'm the broker here. And the home inspector, these are folks, this is somebody that you are going to hire and you're going to pay. Normally, a home inspection is around $400 to $500 or so. Depends on the size of the home, okay? And a lot of folks do not have a home inspector in mind. That's why I keep a list of home inspectors. You can choose to pick one of those or pick somebody else. Totally up to you. It's your decision, but it is somebody that you're going to hire to go out and evaluate the home and look at any conditions and all of that. They're going to write out a report, and we're going to go over it together. All right. What I always want to do is after the inspector is done, I show up at the end of the inspection and they go over what their findings are so we know as quickly as possible because this um, we need to move as quickly as possible through the option period. All right, so we're not losing any time to be able to negotiate and make sure that you are in the best position possible to move forward. All right. The loan originator, that is your go-to person at the lender. They are going to guide you through the entire process and make sure that they're finding the right mortgage solution for you to be able to purchase a home. Loan processor, that is going to be the person that's collecting all of your paperwork. Yes, they're going to ask for a lot of documentation. Please be patient with them, and they have a need to do all of that. So they're going to be collecting all the paperwork and putting together your file and turning that on over to the underwriter. What's the underwriter there to do? They are there to confirm that you have the ability to repay the loan and that the value of the home actually meets all the guidelines for that particular type of loan. There's lots of other things that they do, but that's in a nutshell. They've got quite a job. The appraiser is a independent third party that's going to go to your home. They are licensed. They're going to go to the home, evaluate the exterior, walk through the interior, and confirm the fair market value of the home and look for any types of health or safety hazards, concerns. And if there are any, then they're going to expect them to be done before you can actually close. Just keep that in mind. And the title escrow officer, they are very important to you. They are at the title company, and guess what they're there to do? They're to make sure that there are no obstacles for you to be able to even own this home, whether it is any kinds of liens on the home, tax liens, or any type of other types of obstacles. Okay, make sure that there's not a zoning issue or anything like that, and provide a clear, clean title. What you don't ever want to hear is this has a clouded title. You need a clear title when you go to close. Okay, and they're also going to be providing title insurance for you as the new homeowner. All right. Last but not least is your homeowner's insurance agent. They do play a pivotal role. You want to talk with them about what your options are, the types of homeowner's insurance policies that you may have available to you, what your deductible will be, what your premium will be, and all of that, and making sure that you understand what you are getting to cover you in the event that something happened to your home. That is out of your control. Now, along with this, you want to find out what the best mortgage solution is for you. You've got a couple different options. Conventional loan is going to be any type of loan that is not guaranteed or backed by the U.S. government. An FHA loan is going to be a type of loan that is backed or uh, confirmed or guaranteed by the U.S. government, and that's at a 3.5%. Conventional loan is normally at 5%. It could be less. The VA loan, this is a Veterans Administration loan, is going to be for those that meet certain criteria. One of those being that they have honorably served in the U.S. military. There are a lot of other criteria that has to be met there. But this is a type of loan where you have a 0% down payment. Great, huh? USDA loan doesn't sound like something that you would be talking to a lender about, right? It is a loan that is for more of a rural area. And here in San Antonio, those rural areas are becoming very popular, to say the least. This is another 0% down payment type of loan, but there are many criteria that have to be fulfilled, not only by the borrower, you, but also where the home is located. And if it meets all their criteria, then that may be a great option. Construction or rehab loans, according to the type of situation, what you're buying, and all of that, that may be appropriate for you. There's also specialized programs. This may be a jumbo loan. This may be a bank statement loan. It may be a down payment assistance situation. And no matter what, there are many different loans and also programs that are out there to help you in your journey to becoming a homeowner, for sure. Now, going beyond here, once you have applied, there are things that you want to make sure that you avoid. I cannot stress this enough. I really can't. They start with, don't change bank accounts, please. Leave everything as it is, all right? Don't apply for new credit or closed credit cards. This again can impact your debt to income ratio and many other things, and actually cause you to not be in position to be able to own your own home at this point. So don't close any credit cards and don't apply for any new ones. Again, don't make any large purchases. Large purchases are anything from a couch to your new TV to the refrigerator, washer and dryer, a vehicle, a boat, anything like that. So if that's on your horizon, you want to prioritize what's most important to you, and then go from there. But please do not do it at the same time. Okay? Don't co-sign for other loans. I had a client, a very sad situation, where they co-signed for one of their adult children to purchase a vehicle, and unfortunately, that adult child did not make payments on that vehicle. The vehicle is repossessed by the lender, and it has now put them in a situation where my clients cannot purchase a home because of how much this event has negatively impacted their credit. So stay clear of co-signing, please, if your intentions are to become a homeowner. And don't deposit cash into your bank account before speaking with your lender. I know this may sound a little odd, but your lender is going to have specific requirements that you're going to have to meet in order to record cash deposits, and making sure that it's actually going to work in your favor and count towards what you're needing for assets and all of that to be able to move forward with purchasing. Well, congratulations on getting pre-approved. Boy, this is such an exciting time, and I know you are ready to start looking at some homes. Before we get started, though, I want to make sure that you know that here at Good to Go Realty, we customize this entire process for what you need. And the way that we do that is, number one, making sure that we are looking at homes that fit your budget.
not necessarily what you're pre-approved for. Believe it or not, those two numbers could be very different. We also want to make sure that we are looking in the right areas that you are considering, and making sure that the homes that we're looking at fit your lifestyle. No matter what, we are here to do what's best
Now,
for you.
5 tips to, now that you're pre-approved, you want to put in your best offer. 5 tips, very important tips that I just can't stress enough, okay? Number one is know your budget. So when you get pre-approved, you're going to be given a number, and you're going to be very excited about that more than likely, right? Well, that number may not be what fits in your budget. So we need to find out what you're comfortable with for a monthly payment and go from there and look at homes that are in your budget. Very important, because when you all get the keys to your house after closing and funding, I want to make sure that you open the door to your new home and say, oh my goodness, I'm so happy. I'm so glad we did this. Not, oh my goodness, what did we just do? Right? You don't want to overextend yourself. I can't stress this enough. We want to make sure that you stay in your budget, okay? And I'm here to help you with that. Be ready to move fast. You're pre-approved, and so when we're looking at homes and you've already done your homework, and these homes you found a couple, maybe they rate at a 9 or a 10. We need to go ahead and put in that offer. It's not a trying to rush you all as quickly as possible. It's all a matter of making sure that I'm doing the very best for you and getting the home that is right for you all. Okay, that's most important. So we need to move as quickly as possible and get that offer in as quickly as possible. Work with an experienced and trusted realtor or broker. It is vital that you have total confidence in the person representing you, the realtor, the real estate broker. It is important that you understand where they're coming from and what the end goal is, and that you have the same end goal, and that they're listening to you, listening to what you're looking for and where you want to find it, and all of that. That's vital. Okay. Make a strong but fair offer. So we want to make this offer to the homeowner as that's attractive as possible, but not putting yourselves in any type of position where you don't have any leeway, and you feel like it's all about what's best for the homeowner. Okay, the seller. So we need to make sure that we find a good balance of all the different parts of the contract and what's negotiable and what we need to put in there, so you all are confident on what you find with the home, and that you feel that you are getting the best option with this home, per the terms of the contract. It's very important that we negotiate properly. And then, of course, be a flexible negotiator. This is a highly emotional time when you are purchasing a home and going through the process. It is so emotional. All these things are happening, and this and that and the other. And you have the homeowner that's selling their home. It's something that they're so proud of, and you are wanting to do the very best for yourselves in this contract, and making sure you get the best out of this entire process. And so I will tell you that emotions can run high, and people can become rigid. So I want to make sure that you understand it is important to stay flexible and understand that there's so much that's involved with this process. Not to scare you, what I'm wanting to make sure of is that you understand how people can uh, uh, be impacted by comments, decisions, and all of that throughout this process. And just to know it's time to be flexible and know that there can be all kinds of different changes throughout the process. And but we're all heading for the same goal, and that's to make sure that you become a homeowner. All right, now that your home has appraised, we're right at the last steps. So you want to make sure that you are staying in constant contact with your lender, making sure that they've got all the final steps done and that you get your clear to close. That's the phrase that you're looking for, all right? That's your last step until you have to close on the lending side. And then we're also going to do the final walkthrough. I will be with you. We'll make sure that all agreed upon repairs are addressed and the home is satisfactory to you. And when we go to closing, you want to make sure that you have a valid government issued ID to prove it is you, and that you have a cashier's check with your cash to close. That's the amount that the lender has confirmed that you need to bring to closing for your portion, whether it's closing costs or whatever the case may be, for you to be able to close. And then we'll go to closing. I'll be with you there too. And you'll fill out all your paperwork, sign it. And all we'll be waiting for is the actual funding to take place. Then the home is yours. I'm so excited for you. These are the final steps. Look forward to calling you a homeowner. Now, when it comes to the closing, there are what's known as the closing costs. I'd already talked about this a little bit. What it consists of is the fees and all of the cost involved to get you to the closing table through the to do with the lender and with the title company, whether it has to do with the attorneys that are involved, no matter what. They don't represent you, but there's an attorney involved with the title company, all types of loan origination fee, and all kinds of different types of fees. That is what makes up the closing costs. Closing disclosure is going to be the document that you're going to receive several days before you actually close. That's going to break down all of the costs involved, all the debits and the credits, and for you to be able to purchase this home and what you actually have to bring to closing if there's an amount that you pay at closing. Okay, that can, of course, differ with all the different scenarios out there. And how much should you expect for the closing cost? This should be, it's normally between 2 and 5% of the purchase price of the home. Between 2 and 5% is what you're normally going to see out there. Okay. Now, there are some closing do's and don'ts. We're going to go over the do's. Making documents available to the lender is very uh, helpful as quickly as possible. Getting everything that they're needing, and I will tell you that you're going to tell me, Shane, this is the second time they've asked for this. Shane, I know I've already given this to them. There may be a reason why they need something again. Maybe they need something that's more updated, or another document is just required at this stage. Whatever the case may be, please bear with them. All right. Prepare to verify your income. This is important. The lender needs to be aware of what your income is, and that they're confident of that the income is there. Okay. Document assets. That has to do with anything that you with your cash or anything like that. Provide proof of gifts. This is where somebody is providing some money to you as a gift in order to help you with the purchase of your home. Again, talk with the lender about what they're needing when it comes to making sure that that is properly documented. They're very detailed about all of that. And then, of course, whether you are a homeowner now and you're wanting to sell your home and buy another home, or you are renting right now, please just continue with your rent or your monthly mortgage payments. Keep up with that throughout the process, and to make sure that there aren't any questions about payments being made. Closing don'ts: applying for new credit. You can tell I've brought this up a few times, right? It's for a reason. Please do not apply for any new credit. Um, Changing jobs. Woo! This is a good one. I actually had a client that was offered a even better position, same line of work, okay, better position with another company, and she let me know about it. She was so very excited, and she was planning on taking it. Well, after evaluating what she would be making, even though it was a raise, if you just saw the two numbers from what she's making right now and what she will be making, even though that was a raise, the fact is, in her current position, she is able to do overtime, and that overtime was allowed to be counted. And so, with her base pay plus the overtime, she was actually making more now than what she would if she took this new job. So, it would actually put her in a bad position and not being able to move forward. So thank goodness we were able to hold off on changing jobs and be able to move on. And my client did close on their home. Even better news is that her current employer found out about the new offer, found out what they were being offered, and hired my client, or offered them even a better position at even a higher pay than what she was going to get at the other company had she taken it. So even better news, right? Some great outcomes there. Make undocumented deposits. Again, going back to get with your lender about how these deposits to your bank accounts need to be documented. Okay, we're talking about like cash deposits. Wait to liquidate funds. Please do not do that. Okay. So if you're needing to delve into your 401k, please do that as soon as possible so that that money is there. Okay. With markets changing all the time, you want to make sure that the money, you can actually withdraw that money. The money is existing in your 401k. So please don't wait to liquidate funds. And please never be afraid to ask questions. We know, all of us, your team, all of us know that this is not something that you do on a regular basis. It's just not. Even if you've bought more than one home, you're just not doing it, every year, every few months, or whatever. So we understand that there's all kinds of questions, all kinds of potential concerns, anything. Please, let's talk about it. Let's make sure that it's out in the open and it's clear. So the more that we communicate, the less potential there is of any kind of additional stress or concerns. Okay, and so it's important to me that you're wanting to talk and get it out in the open. So from here, you've closed, and now you're a homeowner, and there are tax advantages of owning a home. Hallelujah. I don't like to talk about taxes. It's not the happiest subject. In this case, it's all good stuff. Trust me. So you have a statement from your mortgage company every year that will show how much mortgage interest that you have paid, and you can actually deduct that. Mortgage insurance. There is going to be mortgage insurance in some loans, some loan types, and you can actually potentially deduct that. I do want to say, with any of this, please reach out to a CPA or a tax professional to make sure that they know what is going to work for you, what's going to be best for you, what applies, whatever the case may be. Okay, make sure that you are reaching out to the right folks that know the ins and outs of all of the tax codes. Mortgage points deduction. You can actually may possibly be able to get a deduction for any points that you've had to pay when you went to closing. Residential energy credit. This is a great one. So this would be a credit if you want to do improvements to your home to help with your energy bill, to save energy. Fantastic, right? Home office deduction. So this would be for those that are self-employed or independent contractor, that sort of thing, that work from home. And you can actually see about how working from home can help you with your taxes and the space that you use for your offers. There's also the standard deduction and then tax-free profits when selling a home. So when you go to sell a home, okay, there's what's known as capital gains that you get from the purchase of that home. So that's profit that you've made, and you don't necessarily get taxed for that. You want to talk to, again, a CPA or a tax professional to get the details on that. Okay. And so that ends this presentation. To get even more detail, I do want to invite you to purchase my new book, which is your guide to purchasing a home. You can just click on the code here and be able to get your own free guide. I do want to make sure that you are as educated and as informed as possible as you take the next steps into that goal of owning your own home and building your financial wealth. I want to thank you again for joining me here today. Again, I'm Shane Tracy, broker of Good to Go Realty, and I am here to walk you through each and every step to home ownership and making sure that we are finding the right home that fits your budget, that fits your lifestyle, and that fits the area that you're looking for to be able to live in. Take care. Thank you very much for joining me today. Thank you for joining us here today. If you don't mind, take a moment and subscribe, like, comment, and even share this great information. I know there are others out there that will find this invaluable. Until next time, have a great day.